Good morning, Paul Georgie from Allendale. It's February 7th, 2012, and it's Tuesday morning. We're looking at a turnaround Tuesday here today. We're going to start out with everything lower. Corn, soybeans, wheat, all expected to open lower here at 9:30. The news, not a lot of new fundamental news that we're looking at here this morning. In the macro sense, Greece is still dealing with the deadlines and dealing with trying to come up with some solution to their debt crisis. However, the EU is suggesting more cuts and reduction of services. They woke up this morning with a national strike where the people of Greece say enough is enough and they don't want any more cuts. So definitely a battle there, and definitely some work to be done before their next debt payment, which is due toward the end of March. President Obama yesterday signed a bill to freeze all the Iranian assets here in the U.S., certainly heating up conflict and unrest between the U.S. and Iran. So that could cause some support here to the energy markets, although we're sitting 50, 60 lower as we speak. As far as true fundamentals about the grains, South America is getting some rain, and more rain is in the forecast. The weather situation there seems to be not as important in the spotlight anymore. We have to figure out how much grain did they really produce this year. The USDA is coming out with their monthly supply-demand numbers on Thursday morning at 7:30. That is, I think, the reason why we're seeing some adjustments in positions already. Traders trying to get positioned the way they want to be going into that report. Although this report in history does not give us a lot of changes, trade is looking for some adjustments here in ending stocks. In general, they're looking for lower ending stocks in corn, beans, and wheat, only slightly in corn and wheat, and more significant in corn as the trade still feels that the usage is going to be much better than what the USDA had told us last month. Our concern is that the ethanol consumption is going to be less, as we're hearing from ethanol plants that they're having to cut back on production simply because they can't get rid of the ethanol and move the ethanol out of the plants. The storage bins are full. So we'll see Thursday morning, 7:30, the USDA numbers will tell us what to look for here for the next month. The talk about acreage is heating up. The USDA has their annual outlook meeting at the end of February. That will be a key date and something that trade will be watching closely, because that'll really be the first time we'll get to see what the USDA is thinking for the 2012-13 crop. And right now you've got to expect that corn acreage is going to be increased. The profitability of corn over soybeans and wheat is huge at this point in time. Even though we're not planting anything yet, we'll still look to see more corn planted, and probably more corn planted around the world, as this profitability for corn is certainly there. So those are things we're looking at in the grain and livestock. The cutout values finally improved a little yesterday to give the packers some improvement in their red margins. Choice was up 154, Select up 99, and expect cash cattle to trade here later in the week again as the packers continue to reduce production in order to support this price and then support their cutout values. Pork complex, cash markets expected to be steady today. Cutout values were down 35 yesterday. So technically we're looking for a market there that is in the middle of the trading range and looking for some support to come in as we move later on into the week. So A lot of things going on, and reasons to stay in touch with Allendale's research. Please, you can call us at 800-262-7538. We wish everybody a very successful trading day, and I'll talk to you tomorrow morning. Thank you.